On my first real estate deal, I lost $1 million on the very first day by making some major mistakes. But since then, I've been wildly successful and have made tens of millions of dollars for myself and my investors. So no matter what size property you're looking to buy, these are the 5 things you need to learn to avoid any mistake when you're starting out. The first mistake every investor makes is falling in love with the first property. I found these properties in Shaker Square, a suburb, the tail end of Cleveland, right attached to Shaker Heights. And these were 100-year-old buildings, stone, brick. They were absolutely gorgeous. Ones like Jacksmore Mansion, Ludlow Castle. They were stunning. And I fell in love with that look. And because I fell in love with that look, what did I do? Well, I found myself overlooking certain things that I probably should have been paying attention to. An expense pops up here that I found, bad report from the inspector, things like that made me push forward. A higher quote from the mortgage broker or insurance broker on buying the property. When you fall in love with something, you're going to do whatever it takes to get that. The first thing I tell every single person who wants to enter real estate is go find 100 properties, make offers on 10 of them, and make them so low that they would be insulted even receiving them. And guess what? If all 10 say no, you're going to become very immune to being told no. You have to be okay being told no. But guess what? It took that first mistake I made before I realized I love my money more than I love the property. I want to make sure I don't make these bad investments because I fall in love with the deal. I fall in love with the numbers. I don't fall in love with the property. But we all have these stories in our head. This building looks pretty. It's in a great location. It's a booming market. All these things. But at the end of the day, your numbers will reflect that. So focus on your numbers. Don't fall in love with the property. Don't fall in love with the deal. Fall in love with the returns. That's the first thing I tell everybody. Become immune to being told no. It's important that you make offers that you're rejected. Don't harp in on one deal and go to that one deal to try to make it happen. Now that I've learned this, guys, one of my most recent deals is actually falling apart as we speak. There's a lake home that I'm buying. I'm not going to mention where because the deal's still working and there's still a 25 or 30% chance it happens. But I found a lake house somewhere. I love this lake house. I've been there. I've stayed there. My wife loves it. The kids love it. Everyone loves the house. But guess what? I have fallen in love with the numbers. And there are issues popping up. No fault of the seller, by the way. No fault of the seller, the seller's lawyer. It's things that are popping up with the county and the state that are making it a little bit hard for us to make this property deal happen. Am I still going to do my best to do it? Absolutely. But I'm not going to deviate from my real estate calculator, the very software that I made to evaluate my deals that are in our community and software, because I want to make sure that I recognize that I have limited capital and limited time. So I want to just make sure my limited capital and limited time is spent on the right deals, not spent on deals I'm falling in love with. Because trust me, the allure and the love will go away. So you need to have the profit there to make you feel warm and fuzzy inside and feel good about the deal later on. Number 2, one of the biggest mistakes I made was not adjusting for property taxes. This is a very common theme. And guess what? I'll get into it later about who should advise me on this, and I was never advised. But the property tax issue was something huge. That's what caused me to lose $1 million on my very first real estate deal. That was part of the culprit. You have to remember that in a lot of states, in most states, when you buy a property, a lot of times the property tax value will go up to that purchase price. And then if somebody's owned the property for a long time, it might be significantly lower. As an example, you buy a property for $1 million, but the county has it valued at $500,000. Your property taxes are going to double potentially by having that increase in price. That's a very real cost to you. And guess what your seller is going to do? They're not going to say a single thing. I see this all the time, especially on single family homes and 2-unit properties. Why? Because it's done by realtors who say, hey, the current property taxes are this. That's not what it's going to go to. Now, obviously, understanding the property tax laws in your county and state are very important, but you have to be ready to pay a higher tax value and underwrite that as well, which leads me to my third mistake. Do not, under any means, take investment advice from your realtor or real estate broker. The second their commission check clears, where are they going to be? Now you might sit there and say, no, Paul, it's different. It's my buddy. They're not going to do that. Guys, they still have to eat. They still have to make a living. And at the end of the day, if it doesn't go well for you, they're going to say, oh, it's probably management. And that's a reasonable assessment. They're not the ones you need to blame when things go poorly. You need to blame yourself. I blame myself for trusting somebody. My broker looked me right in the face on that deal and said, I will never let you overpay. I never heard from him after there again, and I found out recently he's selling cars in North Carolina. Guess how many f***s he gave about me after he cashed in his $75,000 commission? 0. All he cared about was getting that check. There's no investment in the long run. He wanted to get paid. At the end of the day, your money is your money. Your profit's your profit. Your loss is your loss. If a broker ever tells me, Paul, I think you're over, great, then you put money in the deal. And I'd done that once for a real estate broker, and guess what they said to me? Oh, I got to reevaluate the deal. Wait a second, I thought you were telling me what a great deal it was. And this has happened to me. And also be wary of real estate agents or brokers who buy their own deals on the side. Because at the end of the day, you're going to look at them and say, do you care about me doing well? Yeah, why do you cherry pick deals? Oh, I don't cherry pick deals. Bullshit. We're all humans. Show me somebody's incentives and I'll show you their behavior. At the end of the day, they want to make money too. And if they can get a deal before it goes to market because they have an inside track on something, they absolutely will. I don't blame them, but I can still choose to not work with them and not trust them. That is your right. That is my right. Cynical? Just wait. Your job is to focus on you. And if it doesn't make sense to you, as much as they might sit there and say it's a good deal, they're not going to be holding the bag later on if things do go poorly. And if they say they would, tell them to put it in writing. Tell them you're going to escrow their commission for a full 2 years. Great, and I'll give you interest on it. Well, I got bills to pay right now. Fine, how about half? Oh, well, they're not going to accept that. They're not going to accept that, and they shouldn't accept that. But the point is, the same way you should not listen to them. Your job by watching this channel is to become a great investor yourself so you don't listen to anybody else. I tell every broker and agent I know, your job is to bring me deals, I'll take care of the rest. Number 4. Don't hire third-party property managers. Guys, I've hired at least 10, and I've fired at least 10 third-party property managers. And guess what? Every time I do it, revenue goes up, expenses go down, profit goes up. Every single time. Why? Have you ever heard anybody say to you, what's your financial occupancy? No. People say, what's your physical occupancy? Well, is it easier to keep a high physical occupancy with low rents or high rents? Is it higher to keep a high physical occupancy with high expenses, making everybody happy, or low expenses? Show me somebody's incentive, I will show you their behavior. And on top of that, they're going to charge you for every man hour that their people are working on the property. Where's the incentive to get the job done faster? Would they rather take a unit that's vacant and release it, or keep somebody's rent the same to keep them in there because they're only going to get a $100 commission or whatever it is in a big property? Manage it yourself. If you can't manage it yourself, find somebody to partner with who will put money in the deal, not their equity, not their sweat equity, their actual money in the deal. That way, if it goes poorly, they feel it. Let me give you a story. I bought a property in 2009 for $3 million in Columbus. It was the peak of the financial crisis. It was 45% occupied. My third-party manager at the time got it to 90%. But boy, we couldn't make money, and the rents were so low. We were giving away 2 months free. And they kept saying, like, guys, what's going on? I don't know, Paul. They kept saying this. They're leaving faster than they're coming in. Okay, so we put the property for sale. We bought it for $3 million, put about $750,000 into it, put it for sale for $5.5 million. Remember I had a meeting with 2 guys who were buying their first big property, and they said, we think your rents are $200 below market. And even my friend, who was the real estate broker, by the way, he looked at them and said, guys, this is a professional third-party manager. They're not able to get the rents that high. And they said, we think it's too low. We're trying to sell the property for $5.5 million. Couldn't get their financing. We kept the property. I fired that third-party manager. That very first day, 2 months free rent went away, and the rents went up $100 per month. In a matter of 3 years, we were considering selling the property for $10 million. Guys, we couldn't sell it for 5.5 to in 3 years we were selling it for 10. And guess what? We still own that property today, and it's currently worth about $24 million. Now, have we put a few $1 million into it since then? Yeah, but I'm into it for like $8.5 million. Now, you might sit there and say, Paul, those numbers are egregious. I'm never going to have that. First off, you don't know that. And 2, take off a couple zeros. The same things apply. That's what's so great about investing. The same numbers apply, whether it's 2 zeros, 5 zeros, less than, doesn't matter. It's all the same stuff. And remember, if you buy a property that's generating $100,000 a year in profit, $1,000 a year in profit, and 10 years from now, it's making 10 times more than that, what do you think the property value is going to be 10 years from now? That's what matters. Drive up that profit. And third-party managers don't have that incentive. And I'm sick of everybody saying, well, I have to focus on other things, then don't buy real estate. I'm telling you right now, if your goal is only to hire third-party managers because you can't manage it yourself, then don't buy real estate. Go find somebody who manages and puts their own skin in the game. That's what you need to find. The final mistake When I first bought real estate, I lived off the income. But guess what? When a boiler went out, when a roof was needed, I remember thinking to myself, well, I've got to live still too. How am I going to put money in the property? And then I realized something. I started meeting other landlords in the area. And I noticed the ones that lived off their property 20, 30 years later had really shit properties. And I made a decision right then and there. I'm not living off any of my real estate income from now on. I'll give myself a bonus from a refinance or a sale, but I'm not going to live off the cash flow. That's why I have so many businesses upstairs. That's why I have my syndication business where I raise money from investors to do it, because I need to generate other income to live off of so I could keep putting money back in the property. The other thing is, if I can invest $20,000 in a unit and increase the cash flow by $250 or $300 per unit, that's giving me a 15 to 18% return on my money. Where can I get that? It's increasing the value of my property. If I get $300 more per month in rent, I've increased the value of my property by 40 grand by spending 20,000. So I doubled my equity and I'm generating 18% returns on that money. Where do I lose there? So I want you to focus, especially if you're young. Buy one great property per year. Keep your job, keep your business, live off that money, and just keep reinvesting the profits in your real estate. And I guarantee you, you're going to wake up 10, 20, 30 years from now, a very, very wealthy person. Don't fall for the trap of living the good life right now off that income. So what have I done since then? I've corrected all these mistakes as far as I know right now. And I'm so happy I did. The level of confidence I have when I buy a piece of real estate is immeasurable. Yes, I do less deals, but we have 1,000 units now, and I feel immensely confident in their performance abilities in the future. And we're trying to buy 500 units to 1,000 units per year. And I'm immensely confident when we find a property that it's going to be done very well, because I've learned these mistakes. Losing that $1 million day one, that hurt. And it made me think, should I just not even do this anymore? And I was 4 or 5 months in. Should I just take my loss and move on? But luckily, for me, real estate's hard to get out of. It's not like a stock where I could just sell it tomorrow. So I pulled myself up from the bootstraps and I figured it out. And it's been wildly, wildly successful since, to the point where I thank God that I lost that $1 million day one, because it's going to make me hundreds of millions of dollars in my lifetime. And even if that kind of number isn't possible for you, take off a couple zeros, it's extremely possible for you. So if you want to learn how to buy one great real estate deal per year to lead you to millions of dollars, watch our next video. Thank you for your time.